What's going on, everybody? Welcome back to the channel, and in today's video I'm going to be talking about a strategy that you can use to find really good entry points for your longer term positions. But before we get into it, make sure to hit that subscribe button, smash the like, and click that notification bell so you don't miss any of these great tutorials and market updates that we will be uploading to the channel. Now, I know we talk a lot on this channel about day trading and scalping the small time frames and leverage trading, but today I wanted to change gears a little bit for today's video because I've been getting a lot of questions about dollar cost averaging, right? I get a lot of questions like, hey, Frankie, is this a good time to start putting money in for my long-term bags? Do you think the price is gonna go lower? Should I start DCAing in now? Now, when you hear the term dollar cost averaging or DCAing, right? All that means is that you're taking money and putting it into the market, whether the price is up or down, right? So you might pick every day or every week or every month. What a lot of people do is they'll pick, a day, every day or every week or every month, and they'll take a certain amount of money and they will put it into the market regardless of the price, right? And then over time, your average buy-in cost winds up being pretty good and you become profitable over time. This is a proven strategy that people have been using forever. It's a winning strategy. A lot of people don't even try to sell tops or buy bottoms. Basically, they'll just dollar cost average in and let their money sit over time, and it is proven to be a winning strategy historically. Now, I don't typically just choose every day, every week, every month, but I do dollar cost average in. And basically the way that I do it is I use Market Cipher B to identify where I can assume that price is probably as low as it's gonna get, at least for the medium term, and I can identify that that is a good time to put some money in and take the ride up. So I'm gonna be showing you how to find good areas to start dollar cost averaging in, right? So when I find Market Cipher B is looking the way I want, I will start putting, maybe a little bit of money in every day, or every week, whatever it may be. And then as soon as Market Cipher B flips and it's no longer in the best buy territory, I will stop DCAing in and I will let the price go and then pull profits on the way up. But I'm also gonna be showing you the rare cases where you can see an opportunity on Market Cipher B where you can have a pretty good idea that price is as low as it's gonna get. And this is the time where you're looking to maybe not dollar cost average in, but make a decently sized buy. This doesn't happen very often, but when it does happen, it might be time to start eating your SpaghettiOs and start eating your canned food, right? And stop going out to eat, stop going out with your friends, and you might just wanna save up some money just for this time, is when you see this happen on Market Cipher B, it might be time to start dumping some money into the market. So we're gonna be covering those two strategies. Your dollar cost averaging strategy, which happens a little more often, you're able to put more money in more often with that strategy. And then we're gonna be showing you the very rare occurrence where you might wanna start tightening up on the budget and saving some money to wait for these signals to start dumping money in. So without further ado, let's jump into the charts. We're gonna add Market Cipher B to our chart, and I'm gonna show you guys both of these strategies. Let's get into it. So as you can see here, we're on the Bitcoin daily chart. And first, we're just gonna go ahead and add Market Cipher B. So we're gonna come up to our indicators button right here. We're gonna go down to Market Cipher B and click on that right there. And then you see Market Cipher B pops up right underneath our chart. So with this first strategy, now I do want to point out that both of these strategies don't really happen that often, but they do signal very good buying opportunities. So plain and simple, what you're looking for this first strategy is you're going to be looking at Market Cipher B and you're going to be looking at these green and red waves, right? You have your red money flow wave down here, and then you have your green money flow wave up here. Now, if we add this back to our chart, this is what you're going to be looking for, right? You want money flow to be in the red on the daily chart. Now, this is where you can start dollar cost averaging in. As you can see right here, we entered into the red with the money flow as price started coming down. Now, I've been doing this for a little while, so I know that, if we get that daily money flow crossover, you might not want to start DCAing as soon as it comes into the red, because chances are on these daily money flow crossovers into the red, you're probably going to have price come down a bit. So you might want want to wait. You want to let money flow come down, right? This also helps you avoid getting faked out where money flow might dip into the red really quick and then come back up into the green. I would say let the money flow come down a little bit, right? And wait until you start feeling like it might be good prices, right? Even when you come down here, you might be like, this might not be a bad time to start your DCAing process, right? So maybe you make your first buy right here on the wave, which would be around right here. You buy a little bit there. And basically, I mean, plain and simple, you want to be dollar cost averaging when you're in the red on the daily, right? So maybe you buy a little bit there, you know, another week goes by, you buy a little bit here, and then another week goes by, oh, you bought the top of this pump, but hey, you're still very far off of the last high, right? And then you wait for price, you know, you wait another few days, you buy in again down here, you wait a few days, you buy a little bit up here, you wait a few days, and then you buy a little bit down here. So, you know, sometimes you're buying higher, sometimes you're buying lower, hence dollar cost average, right? And then maybe you buy again here or whatever it is, you buy a little bit here, you buy a little bit here, right? And then you're getting the average of all of these prices. So you're buying some super, super low, some high, but even if you're buying the highs while you're in the red, look how high, look how far away you are from, you know, your last high, right? So even to this high, you're still down 33%. So even when you're buying the top of the pumps, when you're in the red, you're still, you know, getting a 33% discount on your Bitcoin. So then when you start to see money flow, you know, starting to come up and you get a bunch of green candles, you might want to stop. You see, oh, I see money flows coming up and we might be coming up to cross into the green, which is what happened here. And we started moving up. Right now, if you got your entries in down here, you would have been able to ride, you know, this giant rip up, and you would have had, this would have been your best chance to enter if, you know, you are just starting to buy at this point, right? Obviously, you know, a better time to enter would have been down here or down here or down here or down here, right? You could just keep going down the chart, you know, but, you know, if you're just looking to start DCAing in, or you know, you bought early and then you sold the top here and you're waiting for a dump, this is what you're waiting for. You're waiting for the money flow to cross into the red on the daily. These are typically and historically good times to buy, right? So even right here, right, you get the money flow crossover right here, and you know, you want to let a little bit of it ride out, and then maybe, you know, you could have made your first buy here, or if you wanted to wait a little further until you got further into the red, you may have bought a little bit here, a little bit there, you might have bought a little bit here, a little bit there, a little bit here, and a little bit there, right? And now you're crossing into the green again. So typically these daily money flow crossovers into the green do bring you up a decent amount, right? So let's just say, for example, I know a lot of people are thinking that Bitcoin's going to go to 100K. Just for an example, I'm not saying Bitcoin's 100% going to 100K. I'm just saying, for example, if you do wind up going to $100,000 for Bitcoin, look where you would have been buying in, all down here, and your average buy cost would be somewhere in this range, and you would make out very, very well. And, you know, we can go back in time and back test this, right? You were in the red right here on the money flow. I do believe this was during March 2020. We all know what was going on there, why that dump happened. You were in the red there, would have made for an amazing entry point to be, you know, dollar cost averaging in at that price. You know, even right here still would have been a great price. You know, same thing here. You could have been buying in here. You would have made out very well, obviously. And then right here, this is basically the bottom of the bear market in 2018, right? We had that big run up in 2017, right? And then started coming down in 2018. This is basically the bottom of that bear market. Look at that. You're in the red. Probably a good time to DCA in, right? So just historically buying in the red, you know, is a decent time to dollar cost average in. So this is what you can look for on Market Cipher B to figure out good times to dollar cost average in. But what about the other strategy I was talking about? When it's time to tighten up on your budget, stop spending your money on stupid stuff and start dumping it into Bitcoin, right? So we're gonna come on over to the weekly chart, right? And pretty much the same thing applies, right? Now, this is a little bit of a longer term strategy, right? Like I said, this does not happen often, but when it does, you wanna make sure you're ready, and you wanna make sure you have a little capital on the sidelines to be ready to put in when price reaches these levels. And you're essentially going to be looking for the same thing, but just on the weekly chart, right? So if you zoom out a little bit here, we'll shrink down the chart. You can see that when the weekly comes into the red, this is the time to buy Bitcoin, right? So right here, this is the bottom of the bear market in 2018. Look at that. I think this is a 50% drop off. You're at the bottom of the bear market here. This is where you want to put a lot of money in, right? Not financial advice. As always, we talk about this on the channel all the time. I am not a financial advisor. I'm just showing you guys what I would personally do, you know, if I was looking to buy in and put a lot of money in, right? So in my mind, when you're in the red on the weekly, this is the time to really start putting money in, right? I mean, you could have bought in, like I said, you want to wait for that money flow crossover to get a little further down below the zero line to make sure you're not going to get faked out. And you see, we dropped like a rock. And, you know, even if you were buying a little bit here, right, a little bit there on the way down, and then you buy all down here, look how you would have made out in this cycle, right? Look how you would have made out if you bought the bottom of here, right? Just imagine that you put a bunch of money in, right? You've been saving up your money. You're taking your profits from the top of 2017, and you're just, you saw that your money flow was getting very high. You thought you were topping out. Let's just say nobody times the top, but let's just say you sold somewhat near the top for 2017. And then you rode down in the bear market. You see money flow coming out. Now you're waiting for the red money flow crossover. You see it starting. You let it ride down a little bit, and now you start buying in this area, right? Now, how would that have played out in the next cycle? It would have played out amazingly, right? And then you see here, you started to dip into the red again. If you wanted to add a little more to your position, you might have wanted to add a little bit more to your position right here when you were in the red with the money flow, right? Now, you weren't in the red here for that March 2020 dump, but if you're looking at the daily chart as well, you might have DCA'd a little bit on this dip as well. So maybe you grabbed a little bit more here, right? And then you had this massive run up to the all-time high of it's about 69K. You would have got 1,000%, assuming your average buy cost would have landed somewhere around here. About 1,000% return on your investment. That is pretty crazy. And we're not even talking about leverage here. We're just talking about buying and holding. So this, although it does not happen very often, it is a very powerful way to know when Bitcoin is basically as low as it's gonna get. And you know, even if we come down into another bear market from where we are right now, and we come down to about, you know, even if it's 20K to test the last all-time high from 2017, you're most likely not going to see these levels again. Now, not impossible that you can't come down again that low, but chances are you may never see these prices again. Long story short, you're basically just buying when money flow is in the red on the daily and the weekly. Maybe you want to put a little weight on the weekly charts, right? So when you see it in the red on the weekly, you might not just want to put in a little bit of money every day. Rather, you might want to start making bigger buys, right? So, and then, you know, when you're on the red in the daily, if you want to start adding a little to your positions, that will wind up playing out pretty well over time. Now, if you're sitting there thinking that I don't have market Cipher B, how am I gonna tell? Frankie Candles has got your back. I'm not gonna leave you hanging. If you don't have market Cipher, it's no worries, because I'm going to give you a free way that you can identify some really, really good entry points, right? And to do that, we are going to be using the 200-day moving average, right? So you wanna come here, you wanna click your moving average, and you're gonna wanna double click right here, and you're gonna wanna go 200, make the length 200, and click OK. Now, with this strategy, what you're doing is you're essentially waiting to be below the 200-day moving average to start DCAing in, right? Or, you know, you could also find decent entry points if you see that price is coming near the 200-day moving average, right? So this would be a good buy. You could have rode it all the way up, right? These all down here would have been a good buy, and then you could have rode it up, and then we are again below this moving average right now, and you know, we are coming up a little bit. It seems like if these two pumps, if these two corrections are going to play out similarly, you know, we came up here, it looks like we're in a similar stage right here as we're coming up and about to starting to to reject off of the 200-day moving average, right? So essentially what you're looking for with this strategy, granted, I will say I do prefer the market Cipher B strategy. It gives you a little bit of a better idea of when to buy, but it's very similar, right? You know, on the daily with market Cipher B, if we pull up market Cipher B just to compare, you know, you can see you're below the 200-day moving average. This is where you'd be buying, and then you are also in the red with the money flow right here. And this is also where you would want to be buying, and kind of the same idea right here. You see the money flow starting to come down and you're below that 200-day moving average. And so you're kind of getting very similar signals using the moving average as you are on market Cipher B, right? We are on the daily right now. Similar idea here. You were in the red on the money flow here. You're below the 200-day moving average. Same idea right here. So you're getting very similar entry points. So if you don't have market Cipher B, you can go ahead and throw a 200-period moving average, look at it on the daily chart, and then that's where you want to be DCAing in. And if we go to the weekly, let's see how the signals play out there. So on the weekly, anytime you are touching the moving average or below the moving average will be a very good time to buy, right? Right here, you can see we were sitting right on the moving average and we were in the red on market Cipher B, so same signal right there. And then even right here, you could have bought in and you weren't even in the red on market Cipher. So you would have got a great entry just using this moving average that market Cipher B would not have signaled you. So this is also a very good strategy. And only buying when you're touching or below, right? I typically recommend when you're on the daily, buy when you're below the moving average, and on the weekly, buy when you're touching the moving average or below the moving average, and you should be getting really good entries. So guys, I think that's all I got for this one. Like I said, I just wanted to change pace a little bit, just because I do get a lot of questions about people wanting to DCA into the market and not knowing when would be a good buying opportunity, or when price is low enough where it's probably not going to go much further down. Everyone's just looking for the best entry point to add to their long-term investments, and I've been getting the question a lot, so I just wanted to make a video and show you guys kind of what I keep an eye on when I'm looking to DCA in. So on market Cipher B, you're on the daily chart, you're DCAing in when money flow is in the red, right? And then on the weekly, same thing. You wanna buy when money flow is in the red on the weekly. But when you see it happen on the weekly, I would say add a little weight to your strategy, right? So when you see you're in the red on the weekly, you might be wanting to put a little bit more of your money in, whereas on the daily, you just might want to dollar cost average a certain amount of money every day as long as you're in the red, right? So think of the weekly as like, oh God, this is a buy signal, huge buy signal. And then on the daily, when you're in the red, it's just, oh, okay, this is good prices. Let me just DCA in, right? And if you can't afford market Cipher, I got your back. You can use the 200-period moving average, and it's the same idea. But with the moving average on the daily, you want to be buying when you're below the moving average. And then on the weekly, you want to be buying when you're touching the moving average or below the moving average. So I hope this helps you guys out. I hope you learned something, and I hope you start using this strategy to get really good entry points on your long-term bags. So go hit the charts, pull up market Cipher B. If you don't have market Cipher B, throw that 200-period moving average on your chart. Look at the daily, look at the weekly, see how price reacted, right? Back test it a little bit. You will see how well it worked out. And then next time you're in the red with the money flow on the daily or the weekly, it just might be time to buy. With all that being said, that's all I got for this video. I'll see you in the next one. Frankie Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor, ayy. On the road, here we go, yeah, we winning by a landslide.